Assalamu alaikum. Good afternoon, everyone, and thank you all for joining us today. We're delighted to welcome you to this session introducing the KraneShares Wahed Income ETF, or KWIN, which is now cross-listed on the Abu Dhabi Securities Exchange. My name is Amin, and I lead corporate relations at the ADX, where we work closely with listed companies and market participants to enhance investor engagement and support the continued development of Abu Dhabi's capital markets. Today's discussion is designed to give you a clear and practical understanding of this newly launched product, what it is, how it works, and how it may fit into an investor's portfolio, particularly for those seeking income in a Sharia-compliant framework. As many of you will know, the ETF landscape continues to evolve globally, and we are seeing increasing innovation in income-generating strategies. KWIN represents an interesting and innovative addition to the ADX product offering, combining global ETF structuring expertise with Sharia-compliant investment principles. Our goal for today is to keep the discussion accessible, practical, and informative, whether you are already familiar with ETFs or are exploring them for the first time. Before we begin, just a couple of quick housekeeping points. The session is being recorded and will be shared after the event. If you have any questions during the discussion, please feel free to submit them through the QA function, and we will aim to address as many of them as possible through the conversation, as well as toward the end of the session. I'm joined today by an excellent panel of speakers representing different parts of the ecosystem behind KWIN. We've got Ibrahim, Shaikh, Principal at Wahed, and Anthony Sassine, CEO of Nukoud and Oceane Invest. Before we dive into the discussion, I'd like to give each of our speakers a brief moment to introduce themselves and their role.
Thanks, Ahmed,
Anthony?
and thank you everyone for... Sorry, go ahead, Anthony.
No, go ahead, Ibrahim. My bad. Go ahead, since you started
Cool,
already.
thanks, Ahmed. And cool. I'm Ibrahim Shaikh. I'm the Principal of Global Investments at Wahed, where I oversee global portfolio allocations and new fund mandates. My background spans global mutual funds, sovereign wealth funds, and private wealth. And thanks again for having me. I look forward to the session.
Hey guys, thank you for joining, and ADX, thank you for collaborating on the KWIN webinar and on facilitating the launch of KWIN. My name is Anthony Sassine, and I'm the CEO of Oceane Invest, which is the market maker handling the KWIN launching and the IOP. I'm also the CEO of Nukoud.com, which is a platform to promote and generate ETF news in the region for local investors, starting from the region out, not globally, and then back into this region. And thank you all.
Okay, thank you, Ibrahim. Thank you, Anthony. So let's set the scene a little bit. To start us off, Anthony, can you, for investors who might be newer to ETFs, how would you simply explain what an ETF is? And can you provide some context on the ETF industry in the GCC and how Nukoud and Oceane are looking to support this ecosystem?
Yeah, no, absolutely. I mean, the ETF is a major financial innovation that we saw come up in the 1990s and kind of explode in the 2010s and 20s today. Today, ETFs have more than $20 trillion in assets globally, which is massive and growing every year. Every one of 3 shares on the New York Stock Exchange traded is actually an ETF. So they're taking over market share in terms of volume from stocks. ETFs are very important for institutional clients as much as to retail clients. People manage their wealth and manage their portfolios and invest in opportunities that us investors from a retail perspective did not have access to it 5-10 years ago. So we're seeing this big innovation happen, which started initially with just tracking the S&P 500. So basically you had the SPY, which is one of the first ETFs launched in the 1990s. So basically, instead of having to buy all the 500 stocks one by one, you just buy the SPY, and that gives you exposure to all 500. And that innovation evolved in a big way into sector ETFs, into bonds. Then we saw thematic ETFs, and now we're seeing derivatives-based ETFs, Sharia-compliant ETFs, leverage ETFs, you name it. So basically, through that wrapper, you can have exposure to anything you want almost globally, to any sector, whether AI or or any US tech or anything along these lines, or even in the GCC, or to just a broad index that you can just put money in every week, every month, and for retirement or for long-term growth. So basically, when I started coming to the region 4 or 5 years ago, we were kind of surprised that we didn't see ETFs as prominent as it is in the US, Europe, and Asia. We had close to 1.5 billion in assets. So that's why we set out to create the two companies, Oceane, which helps the ecosystem kind of promote ETFs, promote liquidity. And what we've done with Oceane, it's so far we're able to lower the cost of trading on investors. Basically, for ETFs to trade, you need a market maker in the back end providing you the codes. And it's very important for investors to watch for spreads because that's the cost of trading. So with Oceane, we have a team of market makers from the US and Europe who were able to provide good transaction costs for investors. We also created Nukoud.com because we kind of realized that education and ETF news was lacking in the region. So we kind of, through Nukoud now, we're trying to collaborate with many global leaders, especially ADX, which has been at the forefront of this revolution, with Waystone, with different companies to kind of bring ETF news to the region, bring ETF education, make it easier for local investors to learn more about the GCC ETFs and also the global ETFs they own in their portfolios. So it's been a good journey. In December of 2025, which is 2 months ago, during Abu Dhabi Finance Week, we were able to cross-list the first two ETFs from the New York Stock Exchange to Abu Dhabi Stock Exchange. That's a major milestone for the region, where actual ETFs trading in New York, big ETFs, we're talking about KWIN, which was a $9 billion ETF. It is a $9 billion ETF, and then also Carbon, which invests in carbon credit, cross-listed from New York, and they were trading on ADX on December 10th in AED for local investors to be able to access during local time zone. And today, we're actually cross-listing two more. Very innovative ETFs. We're very excited about this opportunity to have KWIN and Wahed and KraneShares providing local investors with a way to generate income outside of Sukuk in a very innovative way. I believe it's the first Sharia-compliant option income strategy, and also Ajax, which is very interesting as well. You will hear more about it. It's actually listing tomorrow. Ajax, what's important about it is it can invest in public and private AI companies like the likes of NVIDIA and Microsoft, which we all know, but also the likes of SpaceX and Anthropic. Currently, the fund has 7% in SpaceX and Anthropic. So basically, by just buying that fund, you immediately have a pre-IPO exposure to these very important companies, right? This is really very new and nascent. People who wanted to have access to pre-IPO had to go through many hoops and have a lot of connection with brokers and mostly open for institutional clients. But now this is going to be available on ADX. So basically, we're very excited about the ETF market in the region, and we are happy to collaborate with ADX, Wahed, KraneShares, and other asset managers to bring all these innovative strategies to the GCC.
Okay, brilliant. Now, before we discuss KWIN itself, question for you, Anthony, and Ibrahim, and maybe you can also tag in as well. So we understand Oceane, we understand Nukoud, but then we've also got KraneShares, we've got Wahed. It's just multiple entities here. Could you explain how these different entities are involved, how they came together to create KWIN?
So I can tell you a little bit about KraneShares. That used to be my previous company. This is how we started this whole thing. So KraneShares is a global asset manager based out of New York with 10, 11 billion in assets. The company started by giving investors in the US access to China through KWEB, which is the biggest China fund and listed on ADX today. It's a very, very important fund globally. And after that, after giving access to China, the company started doing more innovative stuff in terms of climate and alternative. And this is where KWIN came together, where Wahed, I'll let Ibrahim talk about it, and KraneShares kind of teamed up to bring a very unique fund to the US and Europe and now to the Middle East.
Thanks, Anthony. And for Wahid, the two focus areas that we have in investments are funds and advisory portfolios. We have a client base of over 500,000 clients that are part of our robo-advisory. We were the first company to list two Sharia-compliant ETFs on the New York Stock Exchange. We have those funds also now on the London Stock Exchange and in future, also the ADX. In terms of the AUMs that we manage, we have over 1.2 billion in Sharia-compliant AUMs that the company manages. The differentiating factor for Wahid is that we are an out-and-out Sharia-compliant company, and not a window of a conventional company that just caters to Islamic finance. So essentially, we think that in the fintech space, Wahid is perhaps the leader in terms of client base and AUMs when it comes to managed portfolios and funds. And our partnership with KraneShares is a sort of step forward into the evolution of the industry into funds that are strategy-based and move out of the equities-only Islamic ETFs that are pretty prevalent at this stage. Something that we did back in 2017 on the New York Stock Exchange has grown into multiple funds across the regions.
Absolutely brilliant. So now back to KWIN itself. What exactly is KWIN, and what is it designed to do from an investor's perspective?
Right. So, just if we can go forward on the slides and look at the graphs that show the growth of ultra short bond portfolios and derivative income ETFs. Slide 4, Sevan, if that helps. You will see that since the rate raising cycle was kickstarted across economies, a lot of capital moved into money market and ultra short bond funds. And you can see the graph sort of take off during the rate rising cycle during from 2022 and onwards. And derivative income ETFs are sort of strategies that are slightly more complex in the sense that they try to derive value out of a particular strategy by managing the risks on both ends, as you will see with KWIN. And they have also taken off, as you can see from the graphs. There's about 212 ETFs now that use derivatives-based strategies, 146 billion in AUMs managed by those ETFs, which is tremendous in scale if you think about it. And KWIN is a sort of an offering that sits under this table. And the difference between other derivative-based strategies or most derivative-based strategies than KWIN is that the market direction risk with such strategies exists in the other ETFs, whereas the way KWIN strategy is constructed is to be market neutral, right? When we go into the specifics of the strategy, we'll see that directional risk of the market is largely reduced, and a market neutral strategy is constructed using exchange traded options contracts, and a trade-based strategy is constructed in a way that's also Sharia compliant. So that's in a nutshell the value addition that KWIN is bringing to the market, is that it's an income-based strategy that takes out market directional risk and offers a low volatility option for investors to generate income.
If I may add here.
You go ahead, Anthony. Sorry.
Yes. So basically, option-based strategies have become a huge driver of growth and innovation in ETFs, right? So this started happening almost 2 years ago, and now we're seeing this happen across the board. So basically, you're harvesting the premium on options to derive income, right? And when you have volatility, the premium is higher. So we're seeing a lot of these strategies come up. The first one was JEPI, which came out with JP Morgan. It's a $25 billion fund where JP Morgan was buying covered calls on US companies, and now we're seeing this happen on Bitcoin, on specific stocks. And for the first time with Wahid, they were able to package it into a Sharia-compliant product that is able to neutralize the movement of stocks and give the investors the ability to get an income on a yearly basis. They're expecting close to 5% income. And that's a little bit very different from Sukuk as well. So this is very innovative for the region.
Very insightful. Now that we're also joined by James Maund, Head of Capital Markets from KraneShares, I have a quick follow-up question for you. But before I ask, maybe you could take a minute to just introduce yourself, James?
Sure. Thank you very much, and apologies for the technical glitches that prevented me from joining until now, but I'm so happy to be here with all of you today. I'm James Maund. I'm Head of Capital Markets at KraneShares. I oversee all of the relationships with exchanges, market makers, and APs who are creating shares of our ETFs, as well as overseeing all of the day-to-day portfolio management and trading across all of the KraneShares funds globally. And very excited here to speak with everyone today about KWIN.
Thank you for the intro, James. So Anthony and Ibrahim helped explain what KWIN is as a product. So question for you, what does it mean for KWIN to be cross-listed on the ADX, and why is that relevant for investors in our region?
Sure. It's a couple of reasons why we're excited about the cross-listing and why it's unique, innovative, and powerful for investors. KWIN is a US-listed ETF that launched a few months back and has been very popular with investors because of the unique nature of the Shariah-Compliant income, which I'm sure Ibrahim and Anthony have covered to this point. And cross-listing in Abu Dhabi is something that's really exciting for everyone at KraneShares and for our investors. It allows access to the local investors in the UAE, as well as providing access during another element of market hours globally. So in addition to having the exposure available to trade during US hours and Eastern time, having the local hours available in the UAE is a huge advantage for investors to trade the exposure during those hours, as well as to have local currency denominated shares. So we're grateful and excited to have the cross-listing coming up on ADX.
Amazing. So if we can talk a little bit about yield and investment case, one of the key points of interest for investors is income. So what kind of yield is KWIN targeting, and how should investors think about that compared to more traditional instruments like Sukuk, for example?
Sure, I'll be happy to take that one. It's generally the risk-free rate, generally the U.S. Treasury rate that is embedded in the options construct that we're invested in. So something on the order of 4% in the current rate environment. Obviously, the rates can fluctuate, so they are subject to change. But currently, we're realizing yields or returns in the high 3s to low 4% annually, which is certainly a huge advantage over the yields from Sukuk. And obviously, as rate regimes change over time, we'll expect to see those numbers to fluctuate in a way that continues to be very competitive yields versus the other acceptable Shariah-compliant instruments.
Now, we've actually got a question in the QA box that I think is maybe relevant as we discuss KWIN as a product. One of the questions is asking, how does this product compare with the SPDR 500 Sharia fund?
Sure. Well, it's actually a totally different exposure. So the Spider 500 is, I believe, designed to track the performance of the S&P 500 index with a Sharia overlay, whereas KWIN is designed to generate more of an income type of experience for investors without taking any significant market risk. So KWIN is more of like a cash investment vehicle, if you will, something that will generate a yield that's consistent with the risk-free rate available in the US versus providing market exposure and market risk to the Sharia-compliant version of the S&P 500 index. So they're significantly different in that regard. The exposures, rather than being a vehicle that provides exposure to large cap US equities, KWIN is a vehicle that provides essentially a cash investment similar to what you'd see if you were to invest in something like treasury bills in the US, for example.
Absolutely. Thanks, James. And I just, Amar, would like to add a couple of points, regarding the yield and the general comparison that was made here. The fund is focused towards being part of the fixed income and low volatility money market sort of sleeves of portfolios rather than the equity sleeve. And I think we have the slide here to list the constituents of the fund, as well as the kind of analyzed yields that are being generated on these securities. And what you'll see is that the portfolio of the fund is made of large cap US, these are bellwether names. You have Adobe, Amazon, Tesla, and Lululemon and CrowdStrike. And so, most of these names are recognizable, and you'll see the annualized yields that we're currently generating on these. Of course, this is gross of the fees and subject to change based on what James mentioned. As the rates in the market change, we average between the late threes, early fours on a net basis, and up to 5% on gross. So the strategy is very different from SPDR 500, which is exposing you completely to the movements in price of the equity prices of the underlying securities. Whereas with the options layered onto these securities that the strategy of KWIN carries, the directional market risk is neutralized. And so the volatility of the fund, if you look at the since inception volatility of the KWIN fund on the New York Stock Exchange, the NAV volatility is less than 1%, versus what you would see on a SPDR is close to a 16-17%. So that's sort of a different class altogether for comparing with this fund.
Well, speaking of which, if we can talk a little bit about the mechanics, right? For those who may not be familiar, KWIN involves options. Can you explain in simple terms how the ETF generates income, building on your point before?
Sure. The fund holds a basket of large cap US equities that are Sharia compliant, and it also holds an options combination on those equities. So it's an options overlay. There's a put contract, which the strategy buys on the underlying stock. So for each underlying stock that the fund holds, we are long put, and we are selling a call contract, again, on that same underlying stock. And the result of that options combination, short a call and long a put, and long the underlying stock, results in a delta neutral position. So it eliminates the market risk on the underlying stock. And the goal of the strategy and the result of holding the stock and the underlying options combination results in extracting the financing element of the options. So options have a few different components. One is the underlying stock exposure, which is neutralized in this case by, again, the combination of the two options positions and the stock position. It also includes elements related to time value and volatility or implied volatility. So what we end up here, what this strategy boils down to in the combination of positions that we hold for each stock and the related options, essentially extracts that time value element of the options combination in the form of a premium that the fund earns when we put on the position. And what we have is quarterly options. So at any given time, you'll see the fund hold options up to 3 months from expiration. And what you're extracting in terms of value is the value of that 3 months of financing of the option. So the result is, again, a cash-like vehicle. It's a delta neutral position. There's no market risk. And the benefit of extracting that time value or realizing the value embedded in options for that time element that ends up coming into the fund in the form of options premium that the fund earns when it puts on a new tranche of options.
Okay, that simplifies things. If we can maybe move into the Sharia compliance behind KWIN. Ibrahim, can you help explain the mechanics of an Islamic ETF? How is the strategy interpreted from a Sharia perspective?
Right. So, at its core, the strategy is, Sharia compliant in two aspects, right? So, for any investment strategy to be Sharia compliant, you need both the underlying assets that the strategy invests in to be Sharia compliant, as well as the manner in which the strategy is implemented to align with Sharia principles. Now, what this means is to ensure that the underlying instruments that the particular strategy is investing into are screened for their business activity. And I'll give you a few examples that the strategy excludes any companies that are involved in business activities that relate to gambling, alcohol, tobacco, or adult entertainment, and the like. And this is a common strand across faith-based and value-based investing. What's unique to Islamic investing also is that a further screening is conducted for financial ratios to ensure that any company that is included in the portfolios is not taking on excessive amounts of conventional debt to fund its business. Now, in KWIN's case, the strategy is fairly straightforward, and James, has described the particular strategy from, the kind of instruments that is used and the positions that are created. The way Sharia interprets this is that the fund begins by purchasing Sharia-screened equities and holding them in custody. So the strategy is asset-backed. At the same time, it agrees a fixed sale price for a future delivery date. And this is done using exchange-listed contracts, which are the options, the long put and the short call, which are used as purely operational tools to give effect to a deferred sale. And they're not used for speculation, and there's no open-ended optionality that is involved. So the two objections with options that Sharia generally has is, in Sharia terms, gharar and maisir. And the two terms, if I loosely translate them, stand for ambiguity and speculation, which is elements of gambling. As you can see with the structure that is created here, it is a fixed price deferred sale contract that does not have any element of speculation and does not have, a case where something is being sold that the fund does not already own. So it's asset-backed, so to say. So from a Sharia standpoint, the economic substance of the structure is that of bay muajjal, which is a fixed price deferred sale. And this is a classical and well-established form of trade under Islamic principles. Any outcome from the strategy, as James also alluded to, comes from the difference between the purchase price of the stocks today and the agreed sale price at delivery, which is, kind of the strike and the premium aggregated, which would form the sale price of the security. So it is entirely driven in that sense by commercial sale activity, not by lending or interest. And just to characterize the particular strategy, I would say that it's using modern market tools to simply implement a traditional Sharia compliant trade structure.
So we've got a question from one of our attendees asking a bit of a technical question with respect to Sharia compliance. He is interested to know how to calculate purification fees on ETFs, or specifically KWIN. Can you help answer this question, Ibrahim?
That's actually a great question. And one of the considerations that we have when we construct the set of securities that are eligible for investing for the fund, it is that we strip out any stocks that are dividend paying. right? So all of the stocks that we see in our portfolios, none of them pays a dividend. As such, the portfolio is constructed in a way that all the gains are made through capital gains and not, distributions. And therefore, the need for purification under this fund is no more required.
Okay, so this would also answer a couple of other attendees' questions who are asking about dividend distributions, if they're subject to withholding tax for UAE tax residents, or if they would cause decay in the long run on the net asset value of the ETF, because they're not looking at dividends, right? It's all capital gains. Am I understanding that correctly, Ibrahim?
Absolutely. The funds are accumulating funds, and they do not make a distribution. So we are aware that US-based income distributions incur 30% withholding tax. That is not applicable to the yields that we mentioned on these funds, because the fund reinvests the sort of gains from the trade structure that it makes back into the fund and does not pay out a distribution. Therefore, no withholding tax that investors have to worry about, whether they're in this region or in the US.
Understood. Makes sense. So back to ETF concepts. We've had even somebody we were just speaking with the other day get confused between IPO and IOP. So when we talk about an ETF and IOP, what does IOP mean, and what does it mean in practice?
So yeah, definitely. This is a very innovative solution that ADX came up with to kind of do some kind of an IOP, which is initial offering price, an initial price offering for stocks, but this is for ETFs, and it stands for indicative offering price. So basically, investors will have the opportunity to invest in these ETFs ahead of time, and they can find them through their brokers. They will show up on some of their bank application, whichever bank is participating in the IOP, and this usually runs for a specific period of time. So now KWIN just started IOP today and will continue till April 21st. And then usually listing happens shortly after, within a few days, and allocation of funds happen within a day or two of the close of the IOP. So this is a great opportunity to get involved in this investment early on.
Okay, that's helpful to know the difference between IOP and IPO and how that relates to understanding the indicative opening price of an ETF. Another term investors may not be familiar with is authorized participant. What role do they play in ensuring the ETF functions efficiently?
James?
Sure. So authorized participants are large banks, large broker-dealers who have the ability to interact directly with the ETF trust to create additional shares or redeem shares back to the trust. We call this primary market trading, which allows the float of shares, if you will, to adjust based on market demand. And this is the mechanism, the create redeem process that the APs are engaged with, is the mechanism that allows the price of the underlying to align with the price of the ETF shares. And it's through that mechanism that large banks and broker dealers have the ability to interact directly with the trust in order to manage the inventory needs that they have based on the trading activity in the secondary market. So when clients are coming in to buy and sell shares. So in theory, because of create redeem and because of the role of the AP, an ETF is as liquid as its underlying basket of securities. So even if you have an ETF with a relatively small amount of assets, a relatively small amount of shares outstanding, that ETF can accommodate significantly larger trades. So you can have an ETF, for example, with 10 million or 50 million or 100 million of AUM, and you can accommodate trades in that ETF of much larger size. You could have $100 million trade or even $1 billion trade come into that ETF with minimal to no impact to price. And this is a significant difference between ETFs and single stocks, where the price discovery mechanism for single stocks is based on supply and demand of a fixed float of shares in the market. In the ETF world, the price discovery is based on the value of the underlying basket of securities, and the float of shares in the market is variable and can be adjusted by create and redeem. So that's what allows investors to get access to the underlying exposure at a price that remains relatively constant. And in the case of KWIN, I noticed there was a question in the chat curious about the lack of price movement in KWIN in a time of tremendous market volatility. Again, the KWIN strategy is designed to mitigate market risk on the underlying securities via the options combination. So it creates what we call a delta neutral investment. Delta refers to the market risk of the underlying investment. And because of the unique combination of options that KWIN holds, the strategy mitigates or eliminates that market risk, that delta investment risk, and allows you to be left with just the implied financing on the options and earning that income, which is unique and powerful in this case, and what we believe is incredibly appealing. Again, I'm sure Anthony and Ibrahim have covered this well, but it is the unique kind of space that this fund fills in the market for Islamic investors who are seeking income without taking traditional market risk.
Basically, it's working, right?
That's right, Anthony. That's a great way to sum it up.
And in an environment of high stress, you can see that KWIN has been stable and just accumulating income, which is what you want, right? And just going back to the AP question, authorized participant and the ETF mechanism is really a huge breakthrough in fund management and investments. And this is what is making ETFs so popular today, right? Before ETFs, we had mutual funds where you can trade once a day and every transaction was taxable, at least in the US. Now, through that mechanism, you're creating much more liquidity, much deeper pool of participants. You're able to create arbitrage, which can take care of mispricing. And also at the same time, creation and redemption is tax-free in the US. It's not counted as a transaction. So that's what makes ETFs very unique. And in terms of liquidity, what you see on the screen is not what you get. When you have a market maker behind the scenes that is able to provide liquidity, you look at the bid and the ask, and you see how much is being offered and how much will be offered even after you buy. The bid and ask will replenish. It's definitely based on the market maker behind the scenes who's able to provide you liquidity. So if you don't see trades on screen, that doesn't mean there's no liquidity. It's very important to know that.
Okay, brilliant. If we can talk a little bit about accumulated yield again, just to make sure that our attendees understand when we refer to accumulated yield, can you explain what that means and how investors should interpret it?
Right. I'll just probably take a stab at it. I see one of the questions in the Q&A that says, does the distribution decay in the long run the NAV of the ETF? And James, feel free to chime in where you think appropriate. So accumulated yield in the sense of this particular strategy, we mentioned that the fund collects the differential in the long put and the short call premiums. And what it does is it takes that premium and it reinvests into the fund rather than distribute it out to the investors. That is what we mean by accumulated yield, that the income that the fund is generating is being reinvested into the fund over time. And it has not been distributed, but nevertheless, it remains a return that the particular strategy has generated over a period of time.
So to answer your question, it adds to the NAV.
Okay, so Ibrahim, maybe just a follow-up before we were discussing about the Sharia compliance and the mechanisms to ensure compliance. We have a question in the chat from one of our attendees asking who would be responsible to follow up on companies' activities in the event of interest activity say, for example, one of the companies in the portfolio takes on a new loan, and who's responsible to make sure that the fund continues to remain Sharia compliant throughout the life cycle?
That's another great question. And Wahed, as the sub-advisor to the fund that ensures that the fund's activities stay Sharia compliant, will be responsible for maintaining that oversight. We have set processes in place to evaluate the universe of securities that are eligible for the fund to invest in at the end of each quarter. And we ensure that the fund offloads any securities that have fallen out of Sharia compliance, and potentially adds any eligible securities that have fallen into Sharia compliance. So we maintain that oversight.
And it goes without saying that the people in Wahed are certified in Sharia law, in understanding Sharia jurisprudence, to be able to make these judgment calls.
Absolutely. Wahed has internal Sharia scholars that will look at the eligibility of securities and the operational functioning of the entire fund. We also have external Sharia boards that we employ that maintain an independent third-party oversight on this particular fund and all the activities that Wahed undertakes. For KWIN's particular fund, we have Abrahamic Finance, who have issued the Sharia certificate for the fund. They are a very respected outfit out of Canada. Dr. Amin is the Sharia scholar that is primarily reviewing the strategy, the fund, and the ongoing reviews that we conduct on the funds.
Brilliant. If we can talk about risks in general, from a balance perspective, what are the key risks investors should be aware of, and who is this product best suited for?
Right, absolutely. And let me take this opportunity to also talk about, the challenges of Sharia portfolios, right? Wahed, our primary business is constructing Sharia portfolios for our clients. And some of the challenges that we have in the Sharia portfolio landscape, particularly when it comes to income exposure, is that the toolkit that is available to investors is fairly narrow. We have on one hand sukuk or sukuk funds and Islamic money market strategies. And both of these have some challenges and structural realities that are worth recognizing, right? Firstly, that sukuk is often concentrated in sovereign or quasi-sovereign issuers, therefore exposing the portfolio to emerging market credit. And secondly, sukuk investors are generally buy and hold investors. Most sukuk are held by Islamic banks to satisfy their HQLA requirements, the high quality liquid asset requirements. And you combine that with the fact that the issuance depends on issuer demand for credit. This means that the secondary market liquidity of sukuk can be severely challenging. Now, on the money market side, Islamic money market funds invest mainly in wakala deposits at Islamic banks. So you can imagine the nature of the assets means that the money market fund, has to maintain a meaningful cash buffer to manage daily liquidity. And for portfolios, this means persistent cash drag, a challenge maintaining liquidity in the portfolios, lack of diversification of income sources. And I think that's where a fund like KWIN comes in, where income is generated through economic drivers that are different from credit, which is the case for sukuk and money market. This is a trade-based strategy. And the USP of a fund like KWIN, I would say, is that it is bringing a time-tested institutional strategy. So as we mentioned, in the early part of the webinar, that strategies such as this have been used by institutions globally since decades. And it makes it accessible now to retail investors and for portfolio managers that are managing retail portfolios. And to come to the second part of your question, where you asked about the key risks, I would say that there are I would categorize them into two key risks. One is execution risk. As we mentioned, there are multiple legs to this strategy, which is going long on the stock, long on the put, and short on the call. So I would say that they need to be done in a coordinated manner. So precision in execution is important. And the second is liquidity, particularly during parts of the market environment is extremely stressed. So the spreads can widen and pricing can become less efficient But these risks are mitigated because, like we mentioned in the early part of the webinar, that the constituents that the fund uses are highly liquid US large cap equities. So they're deeply liquid. Also, the options contracts that we use are exchange traded flex options, and they're also extremely liquid. So, we've thought this through properly, and we've documented it also in the offering documents.
Thank you, Ibrahim, for that. That's really helpful. So given everything that's involved to make KWIN so successful, what are some of the management fees behind the fund? We have a question in the chat box asking if you can share the management fees.
Sure. So the fund is charging a management fee of 51 basis points, so approximately 0.5% annually. And this fee is embedded in the NAV of the fund. So essentially, that fee is extracted from the fund's NAV proportionally each day. 1/365th of the fee is extracted from the fund by the fund administrator each day, which is, again, for this type of exposure, an extremely competitive fee level.
Thank you, James. And from a practical, now to talk about the ETF itself, the product KWIN itself, from a practical standpoint, how can investors in the UAE access and trade KWIN through the exchange, through ADX?
Anthony, do you want to take this one?
Sure, absolutely. So, so basically, we have the whole ecosystem probably here on this call. We have the exchange with Amr, and we have the market maker with us, and the issuer and the sub-advisor. So that's what you mostly need to get a listing on ADX. So basically, now we're going through an IOP, which you're able to actually buy the allocation on your broker's app between now and the 21st. And then we're expecting a listing on April 30th, 29th or 30th. We'll firm up the date very soon. And then once it's listed, then anybody can go into any of your brokers app, even interactive brokers, and just access that fund, just buy and sell. We will be posting quotes on there nonstop with very attractive spreads, and making sure you're having a good experience in getting in and getting out.
As a follow-up, Anthony, if you're a prospective investor and you want to look at some historical returns and the CAGR of how the KWIN fund has been performing, where would one find that?
On slide 11. So I'll let Ibrahim or James talk about this more specifically. Ibrahim, James?
Sure. Go ahead, Ibrahim.
Sorry, James, you want to take this?
Sure. So, as you can see here on slide 11, which is being shared since inception in the US in early November of 2025. So we have approximately 4 months of track record. We've seen monthly returns in kind of averaging just over 30 basis points, which leads to annualized levels in the high threes. Again, this is market rate dependent, so it will fluctuate, but it is in line. The strategy is performing in line with our expectations. In November of 2025, we had monthly return of 48 basis points. December was 32 basis points, January 28, February 40, and March 24 basis points. So again, we do expect to see this return fluctuate alongside of interest rates, but you do see the general shape of the return profile. And here we use an example of a $10,000 investment and the growth of that investment over time. And again, you see it's fairly steady line up and to the right, which is consistent with the goal of the strategy.
So as a follow-up, if somebody's looking to access the offering documents and get access to some of this historical data, where would they be able to do that?
So the documents are all available on the KraneShares fund website, we're also happy to engage individually with interested investors, calls, webinars of this manner. We have email access to our team as well. So there's plenty of access to information about the fund via our website, KraneShares.com.
Okay, brilliant. Now we have a couple of open questions in the chat box. I think we can try to answer these, and then maybe if there are no further questions, we can close. Ibrahim, we discussed this a few times, but maybe just to the benefit of some of our users who are asking about purification fees, if any, and what Sharia standards we're using to identify Sharia compliance.
Absolutely. To address the purification question, like I mentioned, the fund accumulates any returns that it makes through the options overlay structure. And in that sense, does not make any distributions that would incur withholding taxes for non-resident aliens. Also, because it's not making any distributions and not earning any income from dividends, that purification in this case does not apply. The Sharia standards that we use are aligned with OIFI and certified by Abrahamic Finance for this particular fund, as I mentioned. There's Amar, a related question that says, please break down how much of the ETF's return is driven by underlying equity exposure versus the options overlay. And just to address that, like we mentioned, the strategy is delta neutral, which is that it does not take any market directional risk. In that sense, none of the returns are made from equity exposure, but rather the exposure through the options overlay captures the risk-free rate plus a convenience yield, which in this case is in the late 3% and early 4% over an annualized period. And for some of the positions that we have, up to a 5%, of course, gross off fees and that's taken out of the NAV. So I hope that addresses that particular question.
Thank you, Ibrahim, just for emphasizing that point to our attendees today. So before we close, could I ask each of you to just describe KWIN in a sentence or two to a retail investor? How would you describe it very briefly? James, let's start with you.
Sure. I would describe KWIN as a Sharia-compliant cash investment alternative with providing attractive yields with no traditional equity market risk.
Okay, thank you. Ibrahim, over to you.
Right. In a sentence, right? Yeah. Well, I would say that KWIN is a strategy that helps you diversify the sources of income in your portfolio, that generates income through a transparent trade-based structure that's also Sharia compliant.
Anthony?
Sure. So I would describe KWIN as a very innovative fund, first of its kind in the GCC, listing on ADX on April 30th. It's another tool in your portfolio to generate income that is differentiated from Sukuk.
Okay, brilliant. And just one last question, just before we close. That's an interesting question from one of our attendees. Can the ETF be bought in the US and then sold in the ADX, or vice versa? Is that possible?
So yes, shares between here and the US are fungible. Good question. That's what makes the cross listing very interesting. So basically, through the cross listing, you get access to all the ecosystem and liquidity in the US through Oceane. We're able to move your shares between here and the US and back. And what's very important as well is when you buy it here, the currency translation is very low, as the rate for translation that ADX and Bank FOB charge is 3.6725 and 3.6775, I think, which is one of the best rates you can find in the GCC.
All right, brilliant. Thank you very much, Anthony. Thank you, Ibrahim. Thank you, James. And thank you to everyone who joined us today. We hope this session has provided a clear and practical understanding of KWIN and its potential role within an investment portfolio. As a final note, we would encourage you to look out for and participate in the indicative opening price, the IOP, period for KWIN, which will take place from the 15th, so today, until the 21st of April. Separately, we also look forward to hosting you again soon for a separate session on the AJAX ETF, which we referenced a little earlier in this call, which will be listing on the ADX tomorrow. We look forward to your participation and to continuing the conversation around innovative investment opportunities on the ADX. Thank you all very much, and I hope you all have a great rest of the day.
Thank you, Amr.
Thank you.
Thank you.